Welcome to Talk Tickers. Today, we are diving deep into the third quarter 2025 earnings call for the real asset specialist, Cohen Steers. That's ticker CNS. Now, these guys are all about tangible investments. Things like real estate and infrastructure. They just reported, and let me tell you, the market's reaction today is telling a really interesting story. Let's get into it.
And yeah, that story is a very positive one. The stock absolutely ripped higher during and after the call, closing the day up somewhere in that 4 to 6% range. Now, for an asset manager, that is a huge move. It's a massive vote of confidence from Wall Street.
So, that brings us to the big question, right? What exactly did the market hear on that call that got everybody so excited? Let's break down the numbers, the story management told, and what this all could mean for the future.
First things first, let's look at the actual results. Because this big rally wasn't just based on some vague feeling. It was rooted in the fact that they delivered a really clean beat on the numbers.
And I mean, just look at the quality of this thing. They posted 81 cents per share in earnings. The street was only looking for around 78 cents, and revenue came in hot at over 141 million, also beating expectations. So this isn't some kind of mixed bag, It's just a solid, unambiguous beat on both the top and bottom lines. Simple as that.
And this is where the story gets even better. See, it wasn't just that they made more money, it's that they were more profitable. Their operating margins jumped in a big way, from about 33.5% last quarter to over 36% this quarter. That shows some serious cost discipline and really highlights the power of their business model.
And if you look under the hood, the whole machine just looks really healthy. Assets under management ended just shy of 91 billion. They've got tons of cash on hand, and maybe most importantly, their fee rate held steady. It all just points to a company that's in really, really good shape.
Okay, so the numbers. They're strong, but how are they doing it? Let's switch gears and talk about the why. Management laid out a super clear playbook for what's driving these awesome results.
And really, it all comes down to this incredible balancing act. They're trying to thread two needles at the exact same time, keeping those profits high like we just saw, while also plowing money into the things that are going to grow the business down the road. It's this message of disciplined growth that investors absolutely love to hear.
So how do you pull that off? Well, it's kind of a two-step dance. Step one, you keep a super tight grip on your operating expenses, and we saw the proof of that in the margin numbers. And step two, you take all that financial flexibility you've created and you invest it heavily where it really matters.
So where is that investment money going exactly? Well, they're making some big bets. They're pushing hard into active ETFs, and those are really starting to take off. They're starting to cash in on their private real estate business, they're expanding all over the globe, and they're getting perfectly positioned for a potential wave of money into preferred securities. These are the engines for the future.
Okay, now this might be the single most important number from the entire call. Their pipeline of institutional business that's been won but isn't funded yet is now at a multi-year high of $1.75 billion. The key word there is won. This isn't a wish list, folks. This is committed business that's basically guaranteed to hit the books. That gives investors incredible visibility into future growth. It's a huge deal. And if you need proof that the strategy is already working, look no further than this. For 5 straight quarters, they've had more money coming into their open-end funds than going out. 5. That shows consistent, healthy demand from everyday investors and wealth managers. That's a great sign.
All right, let's zoom out for a minute, because no company operates in a vacuum, right? We have to ask, what does the bigger picture, the whole market environment, look like for a company like Cohen Steers?
Well, it's a pretty compelling picture. The biggest tailwind by far is the chance that the Fed keeps cutting interest rates, which is historically like rocket fuel for real assets. Plus, there are literally trillions of dollars just sitting in cash on the sidelines, waiting for a home. CNS is set up perfectly to grab that. Now, the headwinds are real, don't get me wrong. Rates are a double-edged sword, and competition is fierce. But right now, it sure feels like those tailwinds are winning.
So let's put it all together. You've got the clean beat, the expanding margins, that massive pipeline, and this pretty favorable macro setup. So what's our final takeaway? What are we going to be watching for next quarter?
For us, it's pretty clear. Based on how strong this quarter was and all the momentum they have, we're slapping an outperform rating on this one. The company is just executing flawlessly and is standing right in the path of some powerful trends.
And here's our core thesis, all boiled down. As the Fed eases, we expect to see a huge rotation of capital into real assets. The stuff that protects you from inflation. Cohen Steers is probably the single best way to play that theme. And because their margins are getting wider, every new dollar that comes in the door is going to be more profitable than the last. That is just a killer combination.
So how might you play this? Well, here's a potential trade idea that ties it all together. The big theme is this capital rotation. We think money is going to start moving out of private credit, which has been a super crowded trade, right? So the idea is a pair trade. You go long Cohen Steers, and you short another asset manager that's way overexposed to that private credit space. The catalyst is simple: Fed rate cuts. Every cut makes CNS's products look that much more attractive. It's a pretty clean way to play a major macro shift.
And of course, we have to end with our usual reminder. This has been our analysis of the Cohen Steers third quarter earnings call, but please remember, this is not financial advice.